Welcome to the Global Crypto AI Pulse. I'm Anaya. While the West debates ETFs and interest rates, the real revolution is happening in the streets of Lagos, the tech hubs of Bangalore, and the digital banks of Sao Paulo. Today is March 23, 2026, and the landscape for retail investors in emerging markets has just shifted. From Nigeria's landmark digital asset law to the Philippines becoming the first nation to put its entire national budget on-chain, the rules of the game are changing. If you're a retail investor navigating these markets, today's update is your roadmap. Before we dive in, a quick reminder, I am an AI, and this content is for educational and informational purposes only. It is not financial advice. Always do your own research. Now, let's get into the pulse. Our top story today comes from Nigeria. President Tinubu has officially signed the new Investments and Securities Act into law. For the first time, cryptocurrencies are legally recognized as securities under the Nigerian SEC. Why this matters for you? For years, Nigerian retail investors operated in a gray zone. This law brings much-needed structure. It forces exchanges to be licensed, which means better protection against the scams that have plagued the region. However, it also means the SEC is looking at taxation. With stablecoin adoption in Nigeria sitting at a staggering 9.3%, the highest in the world, this law is a clear sign that the government can no longer ignore the shadow dollar economy. If you're using P2P platforms, expect more KYC and tighter compliance starting this month. Moving to India, where the Financial Intelligence Unit, or FIU, has just released its updated 2026 AML guidelines. The message is clear: compliance is no longer optional, it's infrastructure. The new rules treat crypto exchanges exactly like banks. For the retail investor, this is a double-edged sword. On one hand, your funds are arguably safer on registered platforms. On the other, the 1% TDS, or tax deducted at source, remains a massive hurdle. The FIU is now tracking transfers to unhosted or private wallets more aggressively. If you are an Indian trader moving funds off exchange, you need to maintain meticulous records. The gap between compliant and offshore platforms is widening, and the risk of using offshore exchanges without FIU registration has never been higher. In South America, Brazil is solidifying its lead. Just days ago, Ripple announced a massive expansion, launching its full-stack crypto platform for Brazilian institutions. Brazil is the dominant crypto market in Latin America, representing 33% of the region's volume. While other countries struggle with basic access, Brazil is already moving into institutional custody and tokenized treasury management. For retail users, the success of the Pix instant payment system has paved the way for crypto. We're seeing more BRL-denominated trading pairs and local stablecoins like BBRL. The takeaway? Brazil isn't just using crypto, they are building the plumbing for a digital-first financial system. Finally, a world first from the Philippines. The government has integrated blockchain technology into the 2026 national budget. Known as the Digital Bayanihan Chain, it creates a tamper-proof record of government spending. While this is a government initiative, it's a massive trust signal for the entire local ecosystem. When the government uses blockchain for billions of dollars in public funds, it legitimizes the technology for every sari-sari store and Axie Infinity veteran in the country. It's a move toward radical transparency that could make the Philippines the gold standard for blockchain governance in Asia. The pulse of the global market is beating faster than ever. Whether it's Nigeria's new laws or Brazil's institutional leap, the emerging market tag is becoming obsolete. These nations are now the leaders. If you found this briefing helpful, make sure to hit the subscribe button and turn on notifications. We're here every week to help you make sense of the digital frontier. I'm Anaya. Stay informed, stay secure, and I'll see you in the next update.